Hello everybody and welcome to the weekend briefing for the week starting April 10th. In today's video we'll look at a few earnings ahead of the official start of earnings season. We'll take a quick look at some important macro coming this week with CPI, FOMC minutes and even more. We'll have a look at the Non-Farm Payrolls that reported on Friday and see if we can figure out how that will affect the market and rates, of course, on Monday. And we've got lots of charts to look at to get a feel for the market. So we'll look at how some of the setups we've been playing are doing, see if we've made any money there or not. And we've even got a few new setups to take a look at. So, by the way, making sure you smash that like button. We put a lot of work into these videos, and it really helps us out when you smash that like button. Yeah, go ahead, do that right now. Thank you. All right, if you're wondering who I am, I'm Kevin D. I am the Discord, and I'm here to help you and all of our members make sense of everything that's going on in the markets. We do these videos every week to keep our members up to date on what's going on and to highlight fresh opportunities. We have a really cool community of like-minded traders, and members get to take part in live streams and live mentor sessions. So check out the link below in the description and come join us on Discord. We really love to have you there. Here's a really quick disclaimer. Everything we do here is for educational purposes only. We are not investment advisors, do not provide investment advice. All trading decisions are your own and done at your own risk. All right, so let's dig into some earnings here. What have we got? Monday, after the close, Tilray. That should be interesting, I suppose. Although, you know, those kind of stocks are sort of dead. But who knows? You know, one day those probably turn around. Tuesday, before the open, CarMax, I think, will probably be interesting. Nothing really interesting after the close on Tuesday. On Wednesday, LVMH, Louis Vuitton. Brownies, are you watching? Watch out for your position on Wednesday before the open. Also, let's see, after the close on Wednesday, nothing there. Before the open on Thursday, Delta Airlines, that should be interesting. The others, not so much. Nothing after the close on Thursday. Here we go, Friday, check this out. It's the official beginning of earnings season. We start with the big banks. So on Friday, first one to kick it off, JP Morgan. Then we also have United Health Group. It's a big healthcare company. So that's a really important one on Friday morning as well. As if these banks weren't enough. Citigroup on Friday morning. Wells Fargo, BlackRock. And there's a bunch that aren't listed here as well. So the first, first week or so really of earnings is all about banks. Lots and lots of banks. And of course, with everything that's been going on in the banking sector, this is going to be really interesting and no doubt market moving with this coming up. So very interesting stuff there. What's going on in our macro and economic reports? So tomorrow, nothing really new, but we will be watching for the reaction to Friday's Non-Farm Payroll reports, and we'll go into that a little deeper in a sec. Also on Monday, and actually all week long, IMF, the International Monetary Fund meetings through the week. Shouldn't really be a big deal, but you never know. Sometimes surprises come out of these things, out of these IMF meetings that can move the market. On Tuesday, kind of starting Tuesday and all through the week, we've got tons of Fed speak. These guys are talking all over the place, but no economic reports on Tuesday. On Wednesday, this is where the big stuff starts. Okay, Wednesday morning, before the open, we've got CPI, Consumer Price Index. I think we all know by this point in time how important that is. Although the market has seemed to have shifted in the last couple of weeks. We've shifted from this regime of fearing inflation and like for instance, if the CPI came in poorly, which means down, right? Not great for the economy. That would be great for the stock market because then we think that rates will come down too. We seem to have shifted away from that when now we're starting to fear recession more. So if we see a big drop in CPI, you might think, oh, the market's going to go through market's going to moon. No, probably not. The market would probably drop big time on a big drop in the CPI. Because that would be recessionary. So we want to see a little bit of weakness in CPI, not too much. FOMC March meeting minutes. Also on Tuesday, so that's in the afternoon, about 2 o'clock, those meeting minutes come out. And of course, we will be looking to see, or everybody will be trying to see if they can read the tea leaves on the future of rate heights and the terminal rate and when they might start lowering rates and all of that. There's probably not going to be much in there that we don't already know, but who knows? Every once in a while there's a surprise. Where the surprises usually come out is in JPAL's press conference, which starts at 2:30 on Wednesday afternoon. So that is always interesting to watch and watch the markets at the same time too, because it will be volatile. Wednesday looks like it could be a very, very volatile day. Thursday, we have PPI, the Producer Price Index, another inflation measure. An important one, not quite as important as CPI or PCE, but pretty close. This is inflation at the producer level, at the manufacturing level. Also on Thursday, as always, unemployment claims. Friday, we have retail sales. So Friday's kind of all about the consumer. How is the consumer out there buying? If they're buying a lot, if this report comes in great, which means the economy is doing great, well, that is inflationary, and maybe that does bring some inflation fear back. If this report comes in really, a big miss, if it's down a lot, well, then that will bring in fears of recession. So again, we need that Goldilocks print on this. We also have on Friday U of M consumer sentiment and consumer inflation expectations. So as you can see, a lot going on, especially as we get into the later part of the week. Okay, we're gonna dig into the markets, and we'll talk about that non-farm payrolls report as well in a minute. Of course, we always look at the major indices. We look at international markets. We look at important commodities. We look at all of the major sectors. Last week's plays, and see if there's any new setups. But first, I want to start with something a little new, and I really want you guys to sort of give me your opinion on this and tell me what you think. So what we've got here is I've developed a way of measuring what is the trend in the market and how strong is the trend, and with regards to a short-term trend. So we're looking at 1 to 3 weeks is the time frame I'm most concerned with. So a look back of 1 to 3 weeks, and to see what has the trend been doing? Is there a trend even, right? Or are we in compression? Are we consolidating? Is it just sort of chopping around, going nowhere? Well, that would be in compression in this -2 to +2 area. Are we really bullish? Is there a strong bull trend? As you can see, we are at 6 right now. So we're, borderline between sort of choppy and trendy, but definitely leaning towards there's a pretty decent trend going on over this time period. Although over the last week, this has come down from 7. So, are we choppy? Are we bullish? But we're still kind of choppy. And the same thing goes to the other side, to the bearish side of the thing. So, this little meter will change, or should change every week as the market changes. And I thought it might be a good way to sort of keep you guys updated so you can see just how strong the trend might be and, kind of where we are in it. Now, one thing you've got to remember, a couple of things about this little indicator. I'll just go into it really quickly here. So for me, I wanted an objective measure of short-term market trend. Something that I could eliminate my subjectivity and my biases. So everything here is quantifiable using price action and volume. Things like if it's bullish, are the green candles or the big green candles stacked on top of each other? Are the wicks on the candles? Are they buying wicks? Are they selling wicks? Is there more volume on green days than red days? All of these things, that you can actually quantify, go into this model and to spit this number out. Now, it's important to remember that with trend, it's not predictive of the future. However, trends in motion do tend to stay in motion. So that's what we're looking for. If we've been in a trend, and especially if it's a strong trend, well, chances are we probably stay in that trend for a while longer. So it'll be interesting to see how this plays out. And like I said, I'd really like to know what you guys think. Is this useful? Does it need improvement? How could we improve it? Let me know down in the comments. So, all right, let's move on now to some charts. And so we're looking at a chart of the S&P 500. You can see that we really kind of had pretty much a flat week in the S&P 500 and actually in most of the indices, but especially the SPY. And here we are flat, and of course it was a short week. Where do we go from here? Well, on Monday we have non-farm payrolls. And so let's take a look at that report because that came out on Friday morning while the market was closed. And actually what we can do, we'll look at the report first. And I can show you the futures market, the electronic trading in the futures market was open when these numbers came out. So we'll look at the reaction there in a sec, because I kind of wonder if that's the right reaction or not. But anyway, here's the report. Here's the numbers here. You see, average hourly earnings were totally in line and ever so slightly ahead of last month's. Okay, that's fine, right? That's kind of a Goldilocks print. Non-farm employment change. So they added 236,000 jobs last month compared to an expectation of 228,000. However, we're down 90,000 jobs. We added 90,000 fewer jobs in March than in February. So this is good. This is the direction we want to see this go if we fear inflation. And it's not down so much that we are now fearing recession. Okay, the unemployment rate came down slightly. I guess it's a little surprising. We'd have to dig a little deeper into the report to figure that one out. But again, it's very close to expectations. So I would say that this report pretty much came in, as expected. No shockers here. So how did the markets react to that? Well, let's take a look at an intraday chart, and we need to bring up the futures for that. So look at the ES here. Okay, can you see when the report came out? I think it should be pretty obvious, right? So right here on this big green candle, this is when the report was released. And you can see we jumped up a bunch. Not that much though, really. If we just sort of measure our medians on this, so this is pretty much where we were before people started playing around for the report, and then after. So only 0.3%. Not a huge move. It looks like a big move here because there was really no volatility leading into it. But we did go up a little bit, and that's nice to see. And we've kind of drawn a bull flag on this 5-minute chart. The other indices like the Qs and the IWM saw a whoops. I'm going to do the futures, not the the Nasdaq. Very similar response, and same with the Russell. The Russell had a really nice big candle and continuation here. So that's nice to see because we've seen a lot of weakness in the Russell 2000. In IWM lately. So let's go back to our daily charts here. Let's move back to the Qs for a sec. We already looked at the SPY. You can see the Qs had just barely green on the week. Or actually, I'm sorry. No, they closed up here on, that was previous Friday. So actually a little red on the week. But, a little bit choppy, but this short-term trend is still very much intact. And we had a nice reversal candle here on Thursday. So this is good to see. We've come back up into the resistance area. We've got this, these gaps overhead. This looks like it wants to go higher now. But again, the reaction to this non-farm payrolls is important. And then by the time we get to Wednesday, anything could happen there. There's so much coming up later in the week with regards to the macroeconomic stuff that the market really could go any direction. But for now, I would say we have a couple of up days ahead of us. And let's take a look at IWM. Now, IWM, as you know, has been really weak and had quite a weak week. Pulled back a fair bit over the last week. Still very much, as you can see in the bottom chart here, very much underperforming the S&P 500. We need to stick it up and go. You know, it's great that the FAANG stocks are doing great, that the mega cap and large cap stocks are all doing quite well. You know, those are the generals, though, and we need the soldiers to participate. Because if the generals go off to war without any soldiers, who's going to fight? Generals won't. So our soldiers are right here in IWM. We need to see this thing let's go up. If this continues to go down and we start dropping some of these support levels, it could get ugly pretty quick. Now, I think, you know, there's a chance I think we're going to come down and test down this level again around 170. And I think it'll hold. And then we've got another level, another couple of levels below that. But if we kind of wind back a ways, you know, you can see how important this zone is that we're coming and starting to threaten to test again. Very important. So we don't want to spend a lot of time down here. We need to get up and go. All right. Where to next? Okay, let's look at the volatility index. And you can see the volatility has been weak. That's great. As you know, this is inversely correlated to the markets generally. So, yeah, good to see. Don't want to see it come down too low. I've mentioned this the last couple of weeks, how this 18 area has always led to a downturn in the market. We've seen strong bounces in volatility every time it's come down and touched 18. So I'd like to see it stay off 18. I'm okay with it coming up slowly into 20. That would be just fine for me. 10-year yield. 10-year yield rolled over nicely this week. Now, I wouldn't be surprised because the bond market is... Oh, there's one thing. I had one more slide I forgot to show you with the non-farm payrolls. On the release of that non-farm payroll report, where is it? There we go. We saw the target rate for probabilities of the May FOMC meeting rise from 48 to 50%. You can see that here. It was 48% last week, a week before this release, or a week before today. And that has jumped up to now 71% for a 25 basis point rate hike. So before the non-farm payrolls report, it was pretty much 50-50. And now we're at 71% chance probability of a 25 basis point rate hike. So that's the bond market is pricing that in. Let's go back to our bond chart, our yields on the bonds. So the bond market is saying, okay, we are going to get another rate hike. So this should probably move up a little bit, but not much. And if it does move up, I would be surprised if it got through this resistance level at about 3.4 here. So that is our bonds. Let's move over and look at the dollar index. We can see that the dollar index has been chopping around in here. Kind of going sideways right on an important support level. But I suspect this is going to break and the dollar is going to roll over and go down. And this is really important for equities. I mean, you know the inverse correlation to U.S. equities, global equities, commodities like gold. And I want to show you something interesting. Now tell me, do you see what I'm seeing here? Maybe not. It's not as obvious on this chart, but let's go over to the weekly. Let's just zoom out a little bit on the weekly. You seeing it yet? Maybe I'll draw this in here. Okay, here we go. See that now? That, my friends, is a head and shoulders top. Because look at the uptrend that has come from. Nice, beautiful looking head and shoulders top here on the weekly chart of the dollar index. This predicts some downside. So what are we looking at for downside? Just draw that there. Bring that down to our neckline. Okay, because this is the neckline right here. And where does that bring us down to? Well, this major support level in around 90, 89 to 90, and you can see how important this support level has been in the past, going back quite some time, all the way back into 2014. So, I would not be surprised to see a breakdown here and to see over the next couple of months the dollar just to continue its way down here. There's a lot of pressures on the dollar right now. So that's something we need to pay attention to. And it should be good, like I said, should be good for equities if this happens. All right, let's move on to our dollar cost averaging system. You can see on the SPY, the S&P 500, still green, everything looking strong here. For the Qs, this will still be green, obviously, very green, looking nice and strong here. IWM is still red, though, on the dollar cost averaging. System says no go, and it's not really showing any signs of turning green soon. This still needs at least a couple of weeks if it started to turn around before this actually turned green on the dollar cost averaging system for small caps. So like I've been saying, got some work to do there. All right, let's move on to our global stocks. And this is ACWX. This is the all-world stock index, less the United States. And you can see that it had a nice grind up, but we've consolidated a little bit this week. That's fine. We had a nice move. We can consolidate a bit. I expect to see this go higher, especially if my thesis about the dollar is correct. EFA, Europe, developed Far East, and Australia. Pretty much the same thing here. Nice move up. Good solid uptrend. Trend is fully intact. Even after this little consolidation, I expect to see a bounce here, and fairly soon. Emerging markets less China. Not as strong. Have moved up, have consolidated sideways, sitting right on top of a whole pile of moving averages. We should expect to see this go higher. And finally, FXI, Chinese large caps. Again, the similar price action, not as strong as any of the other international ETF we've looked at, though. It's had a bit more of a pullback. It did have a nice big green candle on Thursday, though. So I would expect this to move higher, but China can do its own thing too. We can see the rest of the world going up, and China doesn't necessarily play along. Let's look at some commodities. We'll start with gold. Now, gold had a big day on, I think that was Monday, Tuesday. Is started to make a little bit of a bull flag here. If the dollar's coming down, I think we can expect to see gold go higher. GDX, the miners. These are also suggesting that gold goes higher. We're, so this uptrend is strongly intact. We came through. We closed off this gap that goes way back to May of last year. So we can get that off the chart now. And not far from what should be a fairly strong resistance level, up around 36, though. So watch out for that moving forward. Silver, also drawing a nice bull flag after a really nice move, too. This has had a really good run over the last, I guess this is pretty much a month now. If this bull flag went on for, 2 or 3 more days, and even if it got a little bit tighter than this, that would be a nice breakout to play out of there. Copper. So copper futures picked themselves off the mat today, or last week, right where they should have. This would have been Wednesday. You can see that they came down. Let's zoom in a little here. You can see that, after a few down days, this came down. This broke through its 100-day moving average, tagged a support zone and a trend line, and reversed and put in a nice hammer candle, and then followed through on that the following day. So that's good to see. We're seeing some strength there out of copper, and that's suggesting that maybe fears of recession aren't as strong as the equity market might have been telling us through the week. Crude oil. So you remember last week we started the week with basically with OPEC surprising us and cutting production. Well, oil's been able to go nowhere since that. It's just been consolidating sideways. You could definitely call this a bull flag. But look at this resistance. This resistance level that it's come into and stalled at is strong. So I'm expecting to see oil roll over. And one of the reasons I'm expecting that, as we'll see in a sec here, we got gas as well. Hasn't been able to do anything. And this looks like it wants to break down through this support level. XLE, the energy sector ETF, it has not been able to do anything. And it has been grinding down, unlike oil, which was pretty much going sideways. This one has been grinding down a little bit. Some of the other ETFs in that sector, like XOP, that's pulled back a little bit. Now, it found some support where it should have on Friday, but I don't know. I really expect to see this come lower. OIH, Oil Services. This one is the one that pulled back the most. It's pretty much closed its gap that was left behind last week. Will it find support here at the 10-day moving average? Or do we come down to, say, the 200-day moving average? And that would not surprise me one bit, this coming lower. Okay, let's move into our major sectors. We will start off with consumer discretionary. Now, it was weak, pulled back a little bit, but look at this candle on Friday. Nice reversal candle here, a hammer candle. Volume was a little light on it, unfortunately. But, you know, it's the... sorry, I said Friday, I meant Thursday. I'm probably going to keep making that mistake through the rest of this video. So if I say Friday, I probably mean Thursday. You know, it's not surprising the volume was light on Thursday, the day before a long weekend. It always is before a long weekend. So we will forgive that and call this a decent looking hammer candle. So expect to see this go higher. XLI Industrials. Now, these have been quite weak. You know, one of the stronger sectors for a while, and it's been showing a fair bit of weakness. And you can see these pullbacks. We've got these big red candles that stack up every time we pull back. So this is a really important downtrend line now. And we are at a minor support level. Put in a little bit of an indecision candle here on Thursday. But I kind of expect that this little support is going to break, and we may come down and test this 200-day moving average and these pair of lows right here. Let me actually put a pivot on there, because I think that is going to be an important level in an important area here. So watch out for that in industrials. And actually, I've got a short setup in the industrial sector to show you guys in a little bit. All right, financials. Hey, look at this. Is this the beginning? Is this a potential higher low? And look at that, right on the 10-day simple moving average. Interesting. I like this, especially after having, you know, recently sort of undercutting this, coming to this major support. We've come up, had a nice move up, one nasty, scary red candle there, and you know, recovering from that candle. I do like this price action here, and I think that we'll see more upside out of financials. But remember, earnings season starts on Friday with a bunch of big banks, so that's going to be key for this. KRE, the regional banks, where all of the trouble is. Again, you know, I mean, you look at this, and this is, look at, you got to be bearish here, right? I mean, this is all pretty bearish looking. However, we've done a pretty decent job of bouncing off this area here. I probably should draw it in as a more of an area than a line. Here we go. So you can clearly see how we've got a support area here. We've bounced off it a number of times now. And we had a nice candle on Friday to come out of there. Now, what we need to see is we need to break out of the top of this descending triangle. And, you know, the sooner the better. It would be really nice to see that happen. So definitely worth keeping an eye on. If it does break down here, if you get a close below this level, I think there's going to be another leg down in these things. XLV Healthcare. Wow, what a move in this, eh? We've been trying to point out, a lot of the plays actually that we've been pointing out lately have been in the healthcare sector. And we talked about this last week and thought that this might break out higher out of this downward channel, this former downward channel, and it has quite nicely. This uptrend is starting to get really steep, though. Got a little parabolic coming into this strong resistance level here overhead, and now we've got a little red doji there. I suspect that we don't see a big giant, sudden pullback rollover. I think that what we're going to get out of there is a little bit of basing action in here. May only be for a couple of days, and then break higher out of there. As long as all that macro econ, towards the end of the week plays ball with this. XBI, biotech. So upward sloping channel, but had a rough day during the week. But nice green candle here on Thursday. Stalled right at the 21-day moving average, though, where it had met resistance a couple of days during the week as well. So that's a little scary. Need to get up through that fairly quickly. XLRE REITs, not much going on there if I remember correctly. Yeah, drawing a little bit of a bull flag there. Staples, their move up is stalled. Utilities. This is interesting. Nice move off of a double bottom. Maybe might even call that a triple bottom. Nice uptrend. Consolidate right on top of the 50-day moving average. Big green candle up, breaks through this former uptrend line. You can see where that comes from. Breaks through that with no problem. Through the 100-day moving average. Through the 200-day moving average. Now you can see we gapped up there, pulled back, they sold it, but we found support, moved it right back up, gives you this nice looking dragonfly doji above the 200-day moving average. So I think that utilities are going to go higher. Now normally I wouldn't be excited about that because it is a defensive sector, but I found actually a nice potential play in the utility sector as well. So this was the one of the two really strong sectors. So healthcare and utilities were the strongest sectors last week. I think if we're going to look for plays, that's where we want to be. Let's look at technology. So we had a little weakness, and we had a nice reversal candle, pretty much a bullish engulfing candle almost. On Thursday. It's a nice looking reversal candle, even if it doesn't totally qualify as a bullish engulfing. Communications. Very nice candle here. This is a bullish engulfing candle. Breaking out of a couple of days range there. Watch out for this pivot overhead here in around $59, $60. But this looks like it wants to go higher and will continue to go higher. This is turning into a nice strong trend here. SMH, semiconductors. Strange to see, communications and tech doing okay with semiconductors really getting whacked on the week. They were sort of one of the weakest subsectors last week. But we did come down to an important support level, this sort of convergence of the bottom of the upwards channel, and support level that goes way back in time, and found support there and tried to bounce a little bit. A little weak on Thursday on the bounce. Still was a red day here. It closed down 0.3% on Thursday, but we would expect to see a bounce off of there. Meta, looking at our FAANGs now. This continues to grind higher on its trend line, right on top of this 10-day simple moving average as well. That has behaved really well through most of this uptrend here. And you can see rarely has it come down and touched the 21-day moving average. So expect to see more upside out of Meta. Apple, Not too bad. Took a rest for a couple of days. Bounced off his 10-day moving average, and nice reversal candle. After gapping down on Friday, nice reversal candle and move higher. Amazon. Not doing a ton, but just kind of hanging in there. Netflix. Again, looking a little weak. Didn't show really the kind of strength that we have been seeing out of some of the other FAANGs and some of the other ETFs that we've been looking at so far. But did find support. Drew a little bit of a little dragonfly doji or hammer, a couple of hammer candles really, right there at a major support level. So again, we should expect to see this go higher, especially if the market is going higher on Monday. Google, look at this move here. Very nice looking candle on Friday. This is one of the few that actually gapped up a little bit as well on Friday, and managed to get through this pivot level from over here and hold it. So that's really nice to see. We've got, now we are definitely in a short-term uptrend here. We've got a couple of higher lows, and now we've got a couple of higher highs. So this is really good to see. Nice strength out of Google and Microsoft. Look at that candle. Awesome looking candle here. Big bullish engulfing candle. This engulfing candle, it engulfed what? A whole week's worth of action. There's 1, 2, 3, 4 days there that this engulfed. Almost 5. So we've got this big strong candle. Unfortunately, there's a big strong candle right into resistance. I kind of like to see. I'd like to see a slower move up into there and then a breakthrough. I don't think that's what's going to happen though. I think this is probably, if the market behaves, I think that Microsoft could continue to show relative strength on Monday. And break right through this gap area and come up to test this 300 level. Which is not a bad move for Microsoft. So that will be interesting to watch out for on Monday. And finally, Tesla. Nothing really exciting going on here. We can see that there was 3 days of weakness on pretty good volume too. And I looking at that kind of weakness 3 days in a row like that sort of looks like Elon selling. So I wonder if on Monday we find out that he had been selling some. That would be interesting. But Thursday, indecisive, but at least it's a green candle there. And there's a lot of support right here too. I would be surprised if this doesn't turn around and start to grind higher from here. Okay, let's take a look at some of the setups we were looking at last week. The first one was ARK. Now in all those setups last week, terrible timing on my part. If the OPEC news had come out, even just a couple hours earlier, I would have heard about it and probably wouldn't have recommended any setups. Because I would have seen that OPEC news as inflationary and whacking technology and everything. And most of our setups that we looked at last week were in tech. So, ARK being one of them, of course. I still like this one, but so the others that we were looking at were all in AI, artificial intelligence. And AI, the ticker, got whacked by a short report. I think it was on Tuesday. So all of those setups basically fell apart, and you can see that here. Now, I still like the ARK one though. Even though this, what I wanted to see was this come up into here, go sideways for a couple more days, ideally on top of that 200-day moving average, and then break out. Well, we didn't get that with tech and everything falling apart through the week. We didn't get that. But what we did get was a nice bounce off the 100-day moving average, a nice reversal candle here on Thursday, and we got up above this trend line as well. So found support where it should have found support. Excellent. Let's spend maybe the rest of this week moving up into here. Spend a couple of days getting up into this area, and then spend a couple more days or a few days going sideways right there, and then give us a nice breakout. And that's a breakout we can really dig into. We can, we can really bite into that one and put some risk on, because our risk will be very tightly defined. So I think that this is definitely worth continuing to watch. Now, if it runs right up here in a day, don't play that breakout. It'll just expend too much energy in one day, I think, to make this worthwhile. I think if it did that and then broke out, you'd probably see it roll over, come retest. And then if there were a retest, then maybe we might watch for that, for a play off a retest. But yeah, no, too fast into here, and I don't want it. So that's ARK. LFST is one that we looked at last week, and this broke out nicely during the week. When that would have been, what, Tuesday? Yes, Tuesday. Or Monday it kind of broke out. And then we had a really nice move on Tuesday. Now on Thursday, this popped up and started to pull back. I took a small piece off when this started to pull back in here, because you can see back in here, there's a little bit of resistance there. It's really minor. I didn't even mark it on the chart. It's so minor, but probably should. Where is that right about? Coming from off of that there. Oops, that's not the one I meant to mark. I should mark that one as well. That's the one I wanted to mark there. So you can see how we came into that little minor resistance area and pulled back from it. So that was kind of a clue when it starts pulling back there. It's like, maybe take a little piece off, but just book a little bit of profit. But I still like this trade, and I do think this is going to continue to go higher. And it's in the healthcare space. Workday. So this is one we played. I am no longer in this one. Once we started losing momentum up in here, I took my first piece off. I think it was on this day, and then I closed out the rest over the next 2 days here because it just wasn't doing anything, right? And then it just came, wow, boom. This came down so quickly through the breakout level. It's, I mean, it pulls down back to the breakout level, that's fine. You expect a retest and this to bounce higher, but people must have been freaking out on Thursday when it went down through here. You had capitulation, and look at it, practically tagged the 50-day moving average to the penny and bounced off of there and left you with this really nice hammer and fairly decent volume too on this hammer. Above average volume. Definitely above his 50-day average volume, which is not bad for a holiday or the day before a holiday. So this is interesting. I don't like the risk reward of jumping into this now, but this is an interesting play. And if you're, less risk averse than me, you might enjoy that one. There might be something there for you. All right, let's move on to some new plays. The next one is in healthcare. This is a pharma stock, I think, or biotech. Okay. You can see that this has been moving nicely, up nicely for the last couple of months. Big, long-term uptrend, or at least since a year ago. Okay, and we just recently made a one-year high. You can see where some of the overhead resistance is coming from. This stock looks to be fairly well behaved. It likes to, go up to a level, spend some time there, and then break out of the level and step up to the next one. So I like that. I like when it behaves well on support and resistance areas. And it is doing that now, as you see. So we had a long consolidation. We broke out, moved higher, and now we are consolidating again. I think in the short term, this is a bull flag, and in the short term, I think this could very well be playable. It's pretty tight in here, so it's good risk reward, and we just look to play a breakout. Whether you play it, an early move, above the high of Thursday, or you wait until you come out of this this support level or this resistance level here at 10.07. I think there could be a nice little play here. I think this can get a decent move, and you can see the you can see down here the ATR on this is about 6.5%. So that can give us a little bit of juice. Also see down at the very bottom here, it's outperforming the SPY. fairly consistently until this consolidation when it's flattened out, which we would expect. And volume too is looking good. Volume is coming down in this consolidation. You know, that I didn't check, and I should double check this now, is the RSI. Everything on the RSI looks perfectly normal. Great. No divergences, no bearish divergences or anything there. So there you go. That is ALDX, Aldera Therapeutics. Next one is, I mentioned I had a utility stock for you. This one is AQNU. This is a Canadian, this is a US listed stock, but it's a Canadian utility company. All right, so things not going good for it. Terrible reaction to an earnings report here, but clearly bottoming out. You can see it's trying to start an uptrend, something like that. And we've put in a couple of, a couple of higher lows, couple of higher highs. So we're definitely in an uptrend now, really even almost a uptrending channel here. So let me clean that up a bit. Let's see how this looks here. There we go. Yeah, something like that. Now, so the top of this channel could become a concern. So we got to watch out for that. But you can see this is a nice little pennant has been forming here. It did break out of that on Thursday, but I think there's more room to go on this. So you can see that I've drawn a target here at a measured move for this bull flag. Takes us up to 34, and you can see that the 200-day moving average is going to be right there at about 34 by the time price gets there. If it got through that target and the 200-day moving average, the next area we'd want to watch out for is around the 36 level. So yeah, I think although we're late to the party on this, I think we can still jump in here. But you want to be careful. You want to be really tight with your risk management on this one. And look at the really good volume on this breakout. So that's why I think we've got more room to run, and I'm not super concerned about the top of that channel either. Next one is a short. So this one I would only take if the market is going down. If for whatever reason the market rolls over tomorrow, for instance, and industrials also roll over. Now, if the market's rolling over tomorrow, I'm pretty sure industrials are going to roll over too. And this is a great place to play that move. So, not only is this stock very weak compared to the market itself, it is also very weak compared to the industrial sector. I'll just bring up a different chart here. If you look down at the bottom of this chart, well, actually starting at the top pane of this chart is that stock, Oshkosh Corporation. The middle pane is XLRE, the industrial ETF, and then the bottom pane is the relation of the two. And you can see very weak even compared to industrials, and industrials are weak compared to the S&P 500. So we've got stacked weakness on our side in this one. Now, let's go back to that daily chart, see how we're going to play this. As you can see, we are in a downtrend, lower highs, lower lows. It's come in and held this support level, this pivot, and also, sort of minor support resistance back from this area here. It had a nice bounce off of this before. But this candle it drew on Thursday, not so good. There was lots of volume there, but it's very indecisive. And I think that a move down below here could catch a lot of longs off guard. We could see this come down certainly to 72.50. So that's about a $4 move. But probably down into 70.50, 70 to 70.50 down in here, this old support area here, and that's a pretty decent move, and that would probably happen over the course of about 2 days. Now, like I said, this really depends on market weakness. I'm probably not going to take this. If the market is strong, I'm definitely not going to take this, and it probably won't even be there. If the market's strong, this probably does bounce a little bit, but the market is weak. If the market is going sideways, we might get a play out of this. But just get in and out quick. You don't want to be spending too much time in your shorts. And the last one is Red Robin, Red Robin Gourmet Burgers. I'm surprised. I can't figure out why this thing has been so strong. I haven't really looked. I mean, obviously, there's got to be a fundamental reason for it, right? After it came off this low here, it said, hey, I'm going up. Now, it had, and here's another thing I don't get. I mean, they must have raised guidance on their earnings. But look at, I mean, they lost $2.77 a share on their last earnings report, which is, a lot less than their previous reports. There must have been some sort of extraordinary expenditure here. But the market liked it. So maybe they cleared something up here and then guided higher, and the stock has continued to go higher since then. Now it's moved a ton, so we got to be really careful here. This low is down at $5, so it's pretty much tripled since it made this low in December. We're going sideways now for a little bit. I think there still could be a play in this. As much as this has moved, it's still got some room to go higher. I would only be playing this, and I will watch out for this 1520 level, okay, which is about $1.80 above the breakout. I would watch out for that. Any sign of slowing momentum in there, I'm probably taking a third of the position off. The next, if it gets through there, the next one is 1850. So that gives us $4 on what would probably be a fairly quick move. $4 on a $14 stock. Yeah, I'll take that. That's a nice move. So I think it's worth a shot. And look how tight this is. Risk reward on this is excellent. So that is it. That is all the stocks I've got for you to look at. Hope you've enjoyed this session. Let's move on. Take a look at what we've got coming up for members. So members in the Discord weird, what happened there? On the 12th, this coming Wednesday, we are going to be doing a trader roundtable. Those are always fun. We look at ideally members bring some trades that they have done recently, and we do a really deep dive into them. But members are free to talk about anything. We talk about trader psychology. We talk about what is it about your trading that you want to discuss, and see if we can all together help you out with that stuff. So I really enjoy these sessions. They're always a lot of fun. So that's for members of our Discord. So if you'd like to join us, check out the link down in the description, and we hope to see you there. So thanks everybody for watching. Don't forget to hit that like button, share with your friends, and subscribe. And we will see you all next time. Happy trading, everybody.